What's up, everyone? Virgin Galactic stock is down over 15% today as the company revealed in a filing it completed its stock offering of $300 million worth of shares and is planning to raise another $400 million worth of shares in another offering down the road. So, this new raise will be used for the development of its space fleet, which I think is obviously is the growth driver for this company. And personally, I think this company is very interesting. First off, this is not financial advice, so please do your own research in D&D. But in my opinion, this stock has still a lot of upside to go. I think I'll read a good quote from the CEO here. The excitement continues to build, and we're finally at the cusp of what will be a defining moment for the company. So, obviously, if you're watching this video, you likely know, but the company is going to be having the first commercial space tours at the end of this month, and they'll have it at the end of every month in the future. So, to have the first successful space flight will be amazing for the stock. I really think that the amount of news coverage, the amount of hype that will hit the stock once we actually get that successful launch can't really be quantified, but I do believe that it will have a positive effect on shares. With that being said, speaking of shares, let's take a look at the chart and see if we can come up with a price prediction for the stock over the coming weeks. So, um, honestly, I understand the stock's falling off of the news of the offering, but to be frank, I think this pullback is a healthy one for the stock, as the stock is pulling back from overbought levels according to RSI and is now just coming down to the moving averages. So we almost came down to this 50 DMA today at about $4 and moved higher off of that level. So we moved higher, over 10% off of this 50-day moving average, which to me tells me that these daily moving averages should provide some support for the stock. So it's an outperforming stock. I believe that this 200-day moving average, this 100-day moving average around $4.50 should provide some support for shares and could lead to shares moving higher. So my official prediction is that the stock hangs in there. We kind of, weather the storm, if you will, and hold this level and continue higher up to resistance around 650, which is where shares had topped out in February. So I think we come back up to test that resistance level. So definitely don't see the technicals falling off a cliff. Obviously, share price is down a lot, but at the end of the day, we're still holding the daily moving averages, which is a great sign of bullish momentum. And I would really want to see that continue to keep my bullish thesis on the stock price in the short term. Long term, I've gone over the stock a lot, and I'll also go over the fundamentals at the end of this stock. I'll also cover the short interest in a bit as well. But with that being said, I do believe these daily moving averages hold, and we likely get a move higher to 670 in kind of a run up to this end of the month news. So that's my official price prediction for shares. And then when we look at the company's seasonality trends, so in the stock's 5-year history, this shows me what months the stock typically does well in. So in June, the stock typically rises 22%. In July, the stock typically rises 7%. So we're in a bullish season for shares right now, with June and July being one of the better months, being the second and the fourth best month for the stock in its history. So given we have great fundamental news, given we have bullish technicals and bullish seasonality trends, I do believe that shares likely continue to move higher. So that is my opinion on shares in the short term. And then when we look at short interest data, so short interest ratio for kind of famously known as days to cover, is 5.7, and that basically just means that it takes 5.7 days of average volume to cover the shorts that are outstanding. Obviously, 24% of the float is sold short. So that is a good amount in terms of percentage, definitely above the market average. And then we have obviously, days to cover being at about 5 is pretty good as well in terms of the likelihood for a short squeeze. Typically, a high likelihood for a short squeeze would be about 10, but 5.7 is still pretty high. Although it's not, AMC, GME, short squeeze 2020 levels, but it's still pretty high and still could provide the stock with a catalyst to move higher, as shorts, cover their shares. So, with that being said, let's take a look into the company's fundamentals. So, this is Seeking Alpha, which basically shows valuation growth, profitability, momentum, and revisions. They put all these factors relative to the peers. So it really gives a good comparison on how the stock stacks up relative to peers. So in terms of valuation, obviously the stock doesn't make money, but price to book ratio is at about 4 times, which means the market cap of the stock is 4 times the value of the assets on its balance sheet. So those assets could be property, equipment, those sorts of things. So definitely not a bad number there. Obviously, it grades out pretty poorly, and that's really because there isn't a good there isn't a good sector to put this in, right? There aren't there isn't another space tourism stock in the market, so it's very tough to kind of grade this relative to peers, if you will. So it's really just using the aerospace and defense industry, which isn't a horrible grade, but it's obviously not a space tourism company like Virgin Galactic is, right? So with that being said, I'll jump into the growth numbers. So it's always very, very important when you have a company that doesn't make money, that trades at very high valuations, that you have growth to back it up, right? You have growth metrics to back it up. And that's what we see here with forward revenue growth being at 122%, well above the sector median. So that is very good to see that we are seeing very, very good growth in the stock. And then obviously it is worth noting that revenue growth year over year for the last 12 months has dropped 34%, although we're guiding well above that now for the next 12 months, which is what forward means. Forward revenue growth just means revenue growth for the next 12 months. Year over year is just the last 12. So we're guiding higher than we have been in over the past 12 months. And then we look at profitability. So gross profit margin is 7%. And for those that don't know, that basically is just revenue minus cost of goods sold. So that's why gross profit can be positive and the stock still loses money. It just is, telling you what revenue minus cost of goods sold is. So it's basically telling you, how much they're making for each, on each flight, right? On basically on what they're selling. They're not telling you, how much, R&D costs, how much taxes they're paying. Those types of costs is why the stock doesn't make money, but it's good to see that the gross profit margin is positive. So with enough flights, with enough volume, this stock can definitely be a profitable company. And then another point here, the stock does have $1.48 in cash per share. So I always like to see that. It kind of gives a floor for the stock, if you will, right? So, quick math, that would be about 33% of the stock is in cash. So that gives some stability. Obviously, we have the price to book ratio as well being at 4 times, which isn't horrible. So both of those financial metrics should provide investors with some ease to know that there's a good amount of cash and equipment that the company has, which provides the company some, baseline value. So good to see that there. And then if we take a peek at revisions, so this shows us what analysts are thinking over the past 3 months. So basically, for those that don't know, analysts cover and bring up and down their expectations for revenue and EPS based on company specific news, news on the consumer, broad stock market news. So it is interesting to see that we have net two up revisions relative to down revisions. So for EPS, we have 4 up revisions compared to 3 down revisions. So net, we're positive up revision for EPS. And then revenue up revisions are 4 compared to 3 revenue down revisions. So net up 1 revenue. There's 1 covering analyst that is positive. You know, basically what I'm saying that is basically that there are 4 up revisions relative to 3 down revisions. So net, we're positive one analyst there in terms of up revision. So what this tells you is that share Wall Street is becoming more and more bullish on the stock. Obviously, we just got that fundamental news, which should definitely help things. So good to see that there. Good to see that we are seeing Wall Street become more and more bullish. Although it's not 10 to 1 here. It's just slightly increasing that bullishness. But still good to see nevertheless. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.